Year 11 accountants. This is a new format I'm trying. Let's see how this goes. So credit source documents. So credit transactions. With cash, the purchase or sale of goods occur when the cash is being exchanged. With the credit transaction, on the other hand, two transactions occur. One is the exchange of goods with a promise of repayment later, and then two is the exchange of cash within a specific period of time. So when you purchase or selling on credit, an invoice is created. An invoice is a source document used to verify credit transactions, and we'll go into details on those very shortly. So a sales invoice is when the business issues an invoice for the credit sale of a product. So when you guys, the people who run the place, issues an invoice to a customer when they purchase stuff on credit, that's called a sales invoice. So this is what a sales invoice looks like right here. So you have your business name up the top. You got the customer's name in the middle of the document, usually. Has tax invoice written on there. Tells you when the day of the transaction is. Sorry about that. The invoice number. So in this case, it's number 52. The terms. So this will be new to you. So 5x7 and n/30. What that means is that you get a 5% discount if you pay within 7 days. But if you do not pay within 7 days, you got 30 days and there's no discount available to you. So in the end, 5% discount if you pay within 7 days, or you got 30 days to repay the amount owed. In this case, we're charging for a bookkeeping service, 16 hours. Charge $100 per hour. That's a pretty good rate. So $1,600 is the total. Then you find out the GST amount, which is $160. You add that up. $1,760 is the total amount owed for this credit transaction. So credit note. So sometimes, guys, you'll issue credit notes, or you will get issued credit notes. This occurs because of three different reasons. One, it might be the return of damaged products. It could be spoiled, or it could be the wrong specifications. Secondly, it could be because it's incorrectly priced, or the quantity on the original sales invoice and overall amount was overstated. So they made a doozy on how many they were providing. Or lastly, a sales discount was not applied, so they charge you a wrong price. So these are the three main reasons why the credit note can be issued. So this credit note pretty much reduces the amount you owe, or reduces the amount that's owing on the balance of a credit purchase or a credit sale. In this case, Jerry's temp agency is reducing $220 on A&N's accounting account. Why? Because they overcharge them by 2 hours in this case. So purchase invoice. When you, the business, purchases products on credit. So when you purchase anything on credit, it'll be a purchase invoice. In this case, here we are the customer, Jerry's temp agency. And the person who issued this document is Officeworks. Huh, nice pun there. Alright, so we ordered a box of 2,500 reams of A4 paper, 10 boxes of it. Bloody hell, that's like 25,000 pieces of paper. And printer cartridge refills. So again, we got some terms here. So you'll see that terms are 10/5, meaning 10% discount. 10% discount if you pay within 5 days. And there's no discount. You have to pay within 30 days if you do not meet this requirement here. So the total amount owing is $1,188, including 108 GST. So how do you distinguish between a sales invoice from a purchase invoice? So you probably already noticed they look very similar. How the heck are you meant to tell a difference when it comes to a test or a question that you're working on? So the only way you could really tell is just checking who you are in the question. So in this case, we are Jerry's temp agency. And the only reason we can tell the difference between a sales invoice and a purchase invoice is because if you see your customer in the middle is your own company, you'll know it's a purchase invoice. If it's any other rando in the customer section, you know that's a sales invoice. Alright, so that's how you distinguish between the two. You have to figure out who the customer in the middle is in relation to who you are as a business. So a statement of accounts. This is very similar to a bank statement. It just literally tells you all the transactions that occurred in this particular account and how much is owed at the end of it. So in this case, Jerry's temp agency's statement of account is for AN accounts. So you can see here the balance was 1,200. we made a credit sale of 1760. They made a repayment of 1,200. We've refunded them 220 because of a credit note. So we've overcharged them a few hours from the previous example, and then we've charged them another $1,000 worth of sales here. So in the end, the amount owing to us is 540 from A&N Accounting. So delivery docket. It's a document used to verify that the goods received are the goods ordered. So you guys will probably see this stuff when you order stuff on eBay or when you get stuff delivered at home, like a washing machine or a television. When the truck driver comes in and they issue you the item, they usually issue you a delivery docket. This docket is meant to be compared to your actual order, just to make sure that the items you've ordered is the actual items that you'll be receiving today. If there is a discrepancy between the two, this is where you mention on the comments and they alter it, and then you sign off on it. So they even mention here the purchase order it's referencing. So there's a little bit of detail. So normally they never put the prices on here because sometimes, guys, the person who receives it at the end is not the same person who purchased it. Lastly, shipping and order confirmations. You guys are probably familiar with this. When you purchase stuff online, they usually send you an email within a few minutes telling you your order has been confirmed, and they're going to be sending it within a specific period of time. And lastly, guys, the last source document you'll ever see is a memo. So memos are used when the transaction is neither a purchase or a sale. So guys, this could be stuff like the owners withdrawing stuff from the business, or stuff gets damaged or lost within the business. So in these cases, you'd use a memo to record that transaction. This is your source document to prove that it actually occurred. As you can see here in this transaction, the accounting department, Jerry took one home. Sorry, I'll say that again. Jerry took home a laptop for personal use, so he withdrew. His drawings was a laptop from the business. So that's everything you guys need to know about credit purchases, or credit sales also, and credit source documents and other random documents along the way. You guys should be able to complete the rest of chapter 6. Good luck. If you have any questions or any concerns, please feel free to contact me or email me. You know the gist. See you soon.